Our next roundtable speaker will be Bob DeLaney from CBRE. Bob's going to step up here and talk to us about the industrial market. Bob's been in Tucson for 5 years, but he's been a commercial real estate broker for 30 years. I think he decided the sunshine was nicer here than in Boston, so he decided to join us here in Tucson. And with that, I'll leave it to Bob to talk about the industrial market.
Great. I think this slide's been covered, but this is just a little bit about the emotional roller coaster we've been on, and this probably cuts across different product types, but this is a modification of something that I saw that Raymond James put together on normal financial investing, and just threw some dates on there. And I do think we are kind of in that little trough, somewhere between panic, capitulation, despondency, depression, and hope. But basically, I think it's a very a time of great opportunity for people, particularly in industrial. Statistically, not really much going on in the first quarter. It was a modest net absorption of 40,000 square feet on a 34 million square foot base. Our vacancy rate has been in the 12.5 range for 3 or 4 years, and there's very little under construction. I think that net absorption figure is going to increase as we move through the year. There's some big deals kind of happening as we speak. But generally speaking, things are on a very positive trend in industrial in terms of traffic, and it's not yet apparent in the statistics. Just some deals that have happened in the first 4 months of the year. And I think it's mainly users that have good credit that are taking advantage of low capital costs to buy buildings. The first two, Infinity has a call center down at the airport. They bought this building on April 30th for $98 a square foot because they're going to grow in the building, and rather than continue to lease space in it, they bought it from Brand. Anthem sold their building to Dakota Pro, the web hosting company, for $107 a square foot. These are pretty good prices for industrial real estate. Other user buyers, Wynn Nelson, a plumbing wholesaler, did a short sale and bought a 24,000 square foot building on Huachuca at Grant and I-10 for just under $50 a foot. And Modular Mining bought one of the DEA buildings down at the airport, the office building that they used to occupy, and they're the adjacent tenant, so they paid almost $71 a square foot. A couple big renewals. Border States Electric renewed 80,000 square feet at Perkinaho, 35 cents a square foot triple net. Convergys did a big renewal. I don't know the economics of that deal, but that's at Prince and I-10. And then one decent sized investment sale that Rob Glazer did at Pike Door on a building in Butterfield, a 9.5 cap, $100 a square foot. Very little under construction, as I already said. And industrial land, lots of action, but not a lot of deals. So it's coming, but it's not here yet. And then a couple big box escrows that we believe are happening. The Texas Instruments building down at the airport, we hear is an escrow, and the good old Pella building is back in escrow again. That just goes like this as the market changes. This is very good news if these two deals go through. Trends, you know it's getting better when people start to fight. And the negotiations between tenants and landlords are getting testy and contentious. So tenants are now confident enough to want to go long term. Landlords are resisting that. So the negotiations are kind of interesting. Freestanding buildings with yard, they're doing better than average in the marketplace. But the small multi-tenant industrial buildings are struggling, which is kind of a reflection of the fact that the local companies haven't quite picked up as the national companies. A good strategy is still to buy existing and renovate and reposition, because there's a substantial gap between industrial rents and the cost of new construction. We are not seeing any rent growth yet, but there's a decent amount of variability from south to north, northeast, northwest. Industrial rents are leading the market. And as I just said, the larger nationals are driving the market. The local guys are somewhat on the sideline. And this is a busy slide, but we're all about job growth. So the little wheel in the middle is just trying to depict in industrial what kind of drives our market organically. And these are really the trio, core sectors that we think we can compete in. And within those, the call centers, aerospace and defense and mining seem to be the most active right now that we see. And then the rest of the slide is just trying to overlay the national situation and where we're situated between Texas and Southern California, where there's billions of industrial real estate. Mexico on the upswing, growing at 3.5% to 4% a year, a lot of manufacturing, and then just Phoenix companies that want perhaps to return to Tucson. So we're looking at internal growth and also incoming from outside the market. And just perhaps you saw the article in the Arizona Star a week or two ago on just kind of mining. And this is just one slice of the pie. In Pima County, direct mining jobs, 2,400, but direct and indirect, 13,000. That's more than Raytheon. That's more than the U of A. This is an important sector, and these are high-paying jobs. As you can see, the difference between the mining and mining-related jobs and the average across Arizona and the taxes that they pay. So things are going well. I think most industrial brokers are very, very active. We are a laggard. Until there's job growth and there's more home building, we're not going to go, but we think this will be a strong second half of 2013, and 14 and 15 look very good for industrial.